Good morning, folks. Frank Zorrilla here, Zorrilla Capital, the 24th of April, 8:45 in the morning. Doing a quick video, just continuing doing the series of videos focusing on stocks that have great fundamentals and are also technically intact, using Investors Business Daily and MarketSmith to find these stocks, only because pretty much is the easiest way to find it. What we're looking at today is Palo Alto Networks on the New York Stock Exchange, symbol PANW. And very simply, this stock, I'm excited about this stock. And the reason why, here's the weekly chart. This stock has been trading sideways for 2.8 years. No net movement whatsoever. You can call this a base, a cup, whatever you want to call it, but there's been no net movement whatsoever. Earnings and sales for the last 8 quarters, as you can see here, have been over 25% for the last 8 quarters. The estimates for 2018 is 44%. Estimates for 2019 is 25%. As far as EPS rating, when you compare this stock to the rest of the stocks in the market, 99. Group RS rating, the group itself is doing well. 95, which means is outperforming 95% of the groups out there. SMR rating A. Accumulation distribution for this stock, A minus. Composite rating, total rating is 99. EPS growth rate roughly 85%. So the bottom line is, fundamentally, the stock is doing great. And it's been doing great, the fundamentals, although the stock has been trading sideways for roughly 2.8 years. The high here is $200.55 back on 7/24/2015. And I believe this stock is getting very close to having a monster breakout. They report numbers on 5/30. I'm not so sure that it'll break out before then, but I think this stock is worth a shot and it's worth following. Because this could be a huge earnings breakout, and I'm sure you guys have heard the saying, the bigger the base, the higher into space it goes. But more importantly, I also want you to look at one more thing, that while this stock has been trading sideways, and the numbers have been great, funds have been accumulating the stock. Here, as you can see, back in June 2016, right over here, you had 942 funds that were owners of the stock. That number started to decrease slowly but surely until June of 2017, when only 896 funds were owners of this stock. And then slowly but surely, right over here, you're starting to see the accumulation here on the right side of this base. We went from 896 funds owning Palo Alto to 907, 949, now 952. So that's exactly what happens for the most part. That a lot of people don't realize that the people who build bases are institutions. And we can see that it's happening right now with PANW. Although the stock has been trading sideways for 2.8 years, funds have started to accumulate the stock again, and I think this stock is ready for a huge breakout. What it's going to be, due to their earnings or not, but I think it's worth watching, and I might even more than likely anticipate this breakout and nibble a little and then see what happens once we get to this peak here. But this is the best way to get the earnings and sales numbers. You combine that with the fundamentals, and now we're seeing that the funds are buying the stock. Again, they're accumulating the stock aggressively. This is one to watch. PANW. This is MarketSmith. If you have an interest, there's a trial link at the bottom for whatever it is, for a very small amount, which you can take advantage of. So trade them well and be well.